Hey everyone, and welcome back to The Explainer. Today we are diving headfirst into a wild contradiction sitting right at the absolute bleeding edge of deep tech. We're talking about Rigetti computing. What we have here is literally science fiction level hardware crashing right into the super grounding reality of corporate cash burn. And Rigetti's Q2 2026 earnings, they perfectly capture this whole situation. It's a fascinating story of explosive growth that's actually masking a very, very complicated reality. Let's get into it.
All right, let's kick things off with a number that is guaranteed to grab any investor's attention right out of the gate. 186%. That is Rigetti's year-over-year revenue growth for the second quarter. Now, in the tech sector, and especially in a brand new space like quantum computing, triple-digit growth is exactly the kind of massive metric that makes headlines. It gets the market buzzing. It sends a clear signal that, hey, this company is gaining some very serious momentum.
But we really got to look a little closer here, because this perfectly shows why you can never just look at percentages in a vacuum. That massive 186% growth, well, it actually just represents a jump from $1.8 million to $5.14 million in total quarterly revenue. So the absolute crucial takeaway is that while the growth rate is mathematically spectacular, the company is still only pulling in millions, not billions, in revenue. When you're starting from a tiny baseline, you can have these huge percentage jumps without actually having a massive, scaled-up business just yet.
And here's the reality check. Against that $5.14 million in revenue, Rigetti reported an operating loss of roughly $28.1 million. Just let that sink in for a second. They are bringing in only a fraction of what they're actually spending in this mad dash to build the next generation of computers. And honestly, this right here sets up the core expectation gap we're exploring today. How long can a company burn through cash at this kind of rate before the business can actually support itself?
So let's unpack that in Section 1, the hardware reality.
To really get why Rigetti is burning so much cash, we have to look at what they're physically building, because this is fundamental, bleeding-edge physics. Let's do a super quick recap. Unlike your laptop that uses regular bits, ones and zeros, quantum computers use quantum bits, or qubits, to process data using quantum mechanics. But here is the biggest misconception out there. Just slapping more qubits onto a chip doesn't magically make a better quantum computer. Why? Because quantum information is incredibly fragile. If you have hundreds of qubits, but they're constantly spitting out errors, your machine is basically useless. That is why the whole industry is completely obsessed with fidelity. Fidelity is just a fancy way of measuring accuracy. High fidelity means the system actually does what you want it to do without errors, and in quantum, fidelity is everything.
Which leads us straight to this absolute beauty of engineering, the Cepheus 1108Q. This is Rigetti's newly commercially available 108-qubit system. And I want to emphasize, this isn't just some vague promise on a PowerPoint roadmap. This is real, tangible hardware that customers can actually tap into today. It's Rigetti's highest qubit count system so far.
But what makes the Cepheus system so special isn't just the fact that it has 108 qubits. It's how they actually put it together. See, the old way of building these things was trying to manufacture one massive monolithic quantum chip. The problem with that? It's a nightmare to scale, because every time you add more qubits, your errors just compound out of control. Rigetti's way is totally different. They use a modular chiplet architecture. So their 108-qubit system is actually made up of 12 smaller, interconnected 9-qubit chiplets. It's kind of like building with Legos instead of trying to carve a giant statue out of one single block of stone. They build smaller, super reliable pieces, link them up, and scale from there. It's a very practical path to finally hitting that holy grail of 1,000-plus qubits.
In the performance numbers, they are totally backing this approach up. Rigetti is currently hitting a 99.1% median 2-qubit gate fidelity, and they're actually aiming for 99.5% later in 2026. Plus, their speed is just wild. Their gates operate at about 60 nanoseconds. That is roughly 1,000 to 10,000 times faster than competing tech like trapped ion systems. To put that into perspective, while a competitor's quantum computer is still lacing up its running shoes, Rigetti's machine has literally already finished the marathon. They're pulling this off using some highly advanced fabrication techniques like alternating bias-assisted annealing, which basically just means they are drastically reducing defects. It is pure cutting-edge laboratory science that they've somehow refined into a commercial product. All right, let's pivot to Section 2, the business of quantum. Because, let's be honest, engineering marvels are cool, but they don't pay the bills on their own. We have to look at the commercial reality here. Is anybody actually buying this stuff? Well, the short answer is yes. Earlier this year, Rigetti locked in a very real $8.4 million purchase order. This came from India's Center for Development of Advanced Computing, or C-DAC. They ordered a full 108-qubit system to be deployed in the second half of 2026. This is a huge deal because it proves that customers are willing to write massive checks for physical quantum hardware, not just theoretical research access.
But Rigetti isn't just boxing up physical hardware and shipping it out. Their 108-qubit system is also available in the cloud. You can access it through their own quantum cloud services, plus Amazon Bracket, Microsoft Azure Quantum, and qBraid. And this matters a lot, because realistically, the future of quantum is a hybrid model. Everyday classical computers will hand off the super complex tasks to quantum accelerators in the cloud. By integrating with these huge platforms today, Rigetti is laying the groundwork for a recurring software and cloud revenue model.
Which brings us to Section 3, the runway.
Okay, so we talked about that $28 million quarterly operating loss. That leads to a very practical question. How long can Rigetti keep the lights on while they wait for their hardware and cloud sales to actually scale up? Well, this number right here is their lifeline. As of their recent earnings, Rigetti has over $541 million in cash and investments and absolutely zero debt. In the deep tech world, having $500 million in the bank buys you the single most valuable asset you can ask for: time. They have the time to improve fidelity, time to scale up their manufacturing, and basically time to just outlast the competition. And they are definitely using that time to lock down some heavy-hitting partnerships. If you look at their big Q2 milestones, aside from the tech progress, two things really stand out. First, they signed a letter of intent for a potential $100 million funding setup with the U.S. Department of Commerce. Second, they've got a collaboration with Hewlett-Packard Enterprise, backed by a $5 million National Science Foundation grant, to drop a 9-qubit system into a hybrid supercomputer testbed. So, they are heavily intertwining themselves with big government and institutional research money.
But we can't ignore the ticking clock. A $100 million letter of intent is amazing, for sure, but it is an opportunity, not cash in the bank yet. The fundamental math that every investor's staring at is cash plus cash burn plus revenue growth. Even with a $500 million cushion, losing $28 million a quarter means their runway is long, but it is not infinite. They absolutely have to execute before that money dries up.
And that takes us to our final section, Section 4, the valuation reality.
This is where sky-high market expectations just smash right into fundamental business realities. Let's look at this objectively, because Rigetti is currently sitting on a multi-billion-dollar market cap while only bringing in a few million in revenue. The bull case? It's undeniably compelling. You've got 186% revenue growth, a functioning 108-qubit system, an $8.4 million international order, serious cloud integration, and a massive cash runway. If quantum computing really hits, Rigetti becomes a foundational tech provider for the future. But the bear case? It's pretty sobering. The actual revenue is tiny, just $5.14 million. The operating losses are huge at $28.1 million. The technological risk of making this totally fault-tolerant is off the charts. And oh yeah, they are competing against tech behemoths like IBM, Google, and Amazon, not to mention specialized players like IonQ. And honestly, all that competition highlights a much bigger truth about the whole quantum industry right now. These superconducting systems, often called quantum chandeliers because of all the crazy engineering needed to keep them near absolute zero, are amazing. But this race isn't just about building a cool machine. The wild thing is, the industry hasn't even agreed on what the best underlying technology is yet. Rigetti is betting the whole farm on superconducting chiplets, while other massive companies are betting on trapped ions or neutral atoms. So, a bet on Rigetti is a bet that superconducting architecture is going to win, and that Rigetti can execute better than anyone else. Which leaves us with this final, incredibly provocative thought. The technology here could change the world. It could be enormous. But the actual business today is still tiny. Investors are basically bridging that multi-billion-dollar expectation gap with capital and a whole lot of hope. So the real question you should be taking away from this explainer isn't just, is quantum computing the future? It's, can Rigetti actually survive the cash burn, scale up their commercial orders, and finally prove that someone will pay for this technology at scale? Keep an incredibly close eye on their fidelity improvements and their revenue numbers over these next few quarters. That is exactly what's going to tell us if this sci-fi dream is finally becoming a profitable reality. Thanks so much for diving into this with me today. I'll catch you on the next one.